All right. The most important thing when it comes to trading is identifying a trend, right? So, what is a trend? We either go into the top right corner of the screen or go into the bottom right corner of the screen. It's as simple as that, right? But let me give you the idea of an uptrend and a downtrend on the chart, right? So an uptrend by definition is higher highs and higher lows. When we're creating higher highs and higher lows. So we have a higher high every time, and then we have higher lows every time. So this low is higher than that low. The previous low, this high is higher than the previous high, right? And what is a downtrend? A downtrend is when you go from making, or you're making, you have a high, you create a low, you create a lower high, lower low, lower high, lower low, and so on, right? And then it continues downward, right? So that's an uptrend, and then this is a downtrend. I know that looks a little ugly, but now let's combine, an uptrend going into a downtrend. This right here, so whenever you have an uptrend, you say you're making higher highs, higher lows, and then you make a high that eventually breaks a previous low, right? Because it's no longer making higher lows. It made a lower low. This is called a trend reversal. This is what people call break of structure, market structure shift. A lot of people argue about, oh, this or that. This is what it's supposed to be. It doesn't matter. It's all the same shit, right? This is a trend reversal. Whenever it goes from an uptrend to a downtrend, and by textbook is when you break, a previous low and end up making lower lows and lower highs, and then continue into a downtrend, right? And it's the same thing when you're making a downtrend. You have lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then you end up breaking a previous high and making higher highs, higher lows, higher highs, and higher lows. And then you end up going into an uptrend, right? So this would be your, market shift right there. Your trend reversal where you're making lower lows, lower highs. You break a previous high and you end up making higher highs and higher lows. So that's a trend. Those are trends, and then that's also a trend reversal. Those are like the three main components that it comes down to on the chart. Now, let's look at the actual chart. So this goes all the way back to early 2022, right? Yeah. Look at this. Look how simple this is. You have highs, you have lows. This is a downtrend, obviously, right? You have a lower high, lower low, lower high, lower low. And then you can see here around mid 2022, you break this previous high, right? So price is already being, sellers are already becoming a lot weaker, right? We do make a lower low, and then we start consolidating sideways a little bit. But it did end up making a higher low. It didn't continue lower, right? Higher high, higher low. And then here, it eventually ends up breaking out. Boom. So you can see that the trend reversed there all the way up until our current day there, right? And this is on a weekly time frame. So let me keep in mind that the larger the time frame, the stronger the trends and the stronger the levels are going to be, right? So the trend is not going to be as strong on the 1 minute as it would be on a weekly time frame. This only covers, the last few days, right? But it's all the same concept. Boom. So 15-minute. Zoom in. Let's see, like here we have, obviously we're in an uptrend, so you'd never want to fight the trend. It'd be a lot harder for you to play the downside. How often do we get a move to the downside like we did here versus the move to the upside, right? It's either we're moving sideways or we're going up. There's no reason to short, but we're talking about trend, right? So if we zoom into like something here, so recognizing that we're in a bull trend, right? So we're going up on larger time frames. We're going to the top right corner of our screen. Wouldn't it be more beneficial for us to wait once we start creating a little downtrend, lower lows, lower highs, for us to break a previous low or a previous high to then play the uptrend for a much larger upside move, right? This is what I call a launch pad. When we're in an uptrend and then the market decides to retrace a little bit, then I'll go ahead and play these launch pads. I'll start adding to my position on the way down and then let that thing go, right? So that's what I like to call launch pads. Just like I showed you guys earlier, where we're making lower lows, lower highs, lower lows, and then we broke or we reversed the trend. This is the same thing here. So we have a high, low, lower high, lower low, lower high, lower low. We have a high there, lower high, lower low, and then we end up breaking, boom. Obviously, it's never going to look perfect, but boom, look at that. This is where your point of interest would be. Once price breaks above that level there, that previous high, you can look to try to long around this area. Obviously, you'd want to use a strategy, fair value gap, supply and demand, whatever it is, which will be further down the line in these videos. Right now, I'm just showing you trend. But once you start adding all these things together, because it's not just like, oh, I see fair value gap and then trade every single fair value gap. That's not how it works. You have to have confluence. So you have to have like a breaker structure. You want to obviously have like a launch pad like this. If we're going in an uptrend, you'd rather buy low and then end up selling high, correct? So it's gonna take time. Obviously, this set up over like a few days, so you're gonna have to wait. But I'd rather wait rather than try to guess whenever it's gonna start going back up, because price is gonna tell you what it wants to do. Once it breaks above these previous highs, you can start continuing back up to the upside, right? And if it doesn't, just wait till it does. It's as simple as that. Don't try to force the trade. Don't try to force the direction of the market, because you will be bent over and hit from the back every single time if you try to force it. Just be patient, boom, and you're good, right? So that's pretty much it for this video. Like I said, you can use larger time frames if you're like swing trading. Say, for example, like here. Look at this trend. Boom. So this goes all the way back to August. Well, let me use the 1 day. Looks a lot cleaner. Boom. You have a lower low, lower high, lower low, lower high, lower low. Then you end up breaking the previous high there, continue higher. We haven't retraced down to it, but there's so many other things that you could use. So like there's this previous high. This would be the market shift right there. Boom, the reversal. And then if price ever decides to come down and retrace, obviously it would look like this. You'd have to wait for price to break these lows here, break the uptrend, and to start going into a downtrend like this before you could try placing your risk to reward down there and then following it up. But yeah, that's pretty much how you play trend. And like I said, the larger the time frame, the stronger that trend is going to be. So be wary of what time frame you're looking at. Always make sure that if you're on larger time frames, it's going to take a lot longer for them to play out, right? But say, for example, like this trend here, we have highs, lows, lower lows, lower highs. Then we end up breaking, this resistance level here. I'll go over, levels and stuff in a future video. But, this is on a weekly time frame. It took, let's see, from July all the way down to November. So how many months is that? 1, 2, 3, 4. It took 4 months for this to retrace and then bounce back up and start targeting previous highs. So it's going to take a long time. The larger the time frame, the longer it is, or the stronger it is. Pause, I guess. But you guys get the idea, right? So that is trends. Episode 1. I'm going to go, bit by bit. This is going to be like a very detailed course, I guess. And it's all free. So there's no way anybody can complain. There's no way anybody can say anything. This is going to be like the most detailed, most basic way to trade. And that's really much all you need. You don't need much else besides like the basics. I see a bunch of people having all this crazy stuff on their screen. By the end of this, you guys are going to be able to trade on your own. Boom. And you'll be fine. Yeah, episode 1. You guys take care, man. I'll see you guys in the next one.